Hey, it's Nick here and you're in the Transparent FX Academy. I'm a top author on TradingView and it's time to make another full market breakdown to see exactly what kind of opportunities we can be looking for on the period that we will be analyzing both from a technical and an order flow perspective. So without further ado, let's jump onto the charts. Okay, so the pair that I will be speaking about into this video is USD JPY, and the reason for which I will be speaking specifically about USD JPY is because the pair is about to provide to us a very good trading opportunity. So obviously I want to give you guys a full breakdown of what we have to show you where we can be looking for the next opportunity for USD JPY. And as usual, I will be keeping the video as educational as possible. So first, we will be speaking about the technical aspect of this market. We will then go and see what we have from an order flow perspective with the commitment of traders, which is what hedge funds are doing in the market. And obviously, if you're able to track how the biggest speculators in the market are moving their money, you do have an advantage over your competition in the market. And by the end of the video, by using the combination of our technical and order flow analysis, we will be able to understand where are the best probabilities in this market. Now, starting from the monthly time frame, what do we have? Now, here on the monthly, we have a market which has rejected multiple times this extremely strong monthly support area. In fact, from here, the market had created all this move to the upside again. The market here tested and rejected the zone to the upside again here. The market tested and rejected the zone to the upside again here, tested and rejected. And now the market has just broken below this extremely strong support, which at this point is now turned resistance. So here on the monthly, we have a market which has just broken below an extremely strong monthly support area, which is now turned resistance. So here on the monthly, we have previous support, turn resistance, which the market is testing, and possibly it could reject the zone to the downside. So on the monthly, we're testing previous support, turned resistance. Going down on the weekly time frame, what do we have? Now here on the weekly, what we can see is that the market has just rejected a pretty strong weekly support zone. In fact, this area here was very strong weekly resistance. At this area, the market broke above the zone. At that point, previous resistance was turned support here. The market tested the area and rejected the zone to the upside. Now, generally speaking, if you have an impulse in the market and you want to measure the correction, what you have to do is take your Fibonacci from the low to the high of the impulse. And if we take our Fibonacci from the low to the high of this impulse, what we can see is that the market has just created a confluence of support area. In fact, we can see that our 0.382 Fibonacci retracement is lining up perfectly with the previous weekly resistance, which is now turned support at this area. And we can expect the market to go and retest this previous resistance, now turn support, before creating the continuation to the upside, possibly for the completion of this impulse correction and impulse pattern to the upside and creation of a higher high. So we have a confluence of support zone here, which could be an easy magnet for the price. USD JPY could easily be attracted to this confluence of support area. So at the moment, recapping what we have just said, on the monthly, we are inside of a strong supply zone, and on the weekly, we have a confluence of support at this area given by the 0.382 with the previous resistance turn support, at which we expect the market to go and create a retracement tool. Going down on the daily time frame, what do we have? On the daily time frame, we have very interesting price action as well. In fact, here on the daily, first of all, I had spoken about USD JPY after the market had created this W formation. I made a full breakdown explaining all the reasons for which from here we expected the market to create a retracement. Then from here, I made another analysis explaining all the reasons for which we wanted to see the continuation to the upside. And again, that is exactly what the market did. And I will link in the description these two previous analysis so you can go and check them out for further reference and more free education. Hey, just a quick thing, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. Now, nothing really changed from the analysis I had made on TradingView a few days ago regarding USD JPY. we have an overextended W formation here from a daily perspective. So on the daily, we have a massive overextended W formation. Now, generally speaking, after a W formation, what you want to see is the market create a retracement. Specifically, you want to see the market create a retracement at least to the 0.382 of the Fibonacci taken on the impulse leg. So in this case, from this low to this high. So here what we expect is for USD JPY to create a retracement at least to the 0.32 of the Fibonacci taken on this impulse, which at the moment is this area here. So on USD JPY, we expect a first move to this level. However, as usual, the way in which we have to approach this is being reactive and not predictive. And I will now show you exactly how we will be doing that with students. But first, let's go and see what we have from a COT perspective, so commitment of traders, which is what hedge funds are doing in the market. Now at the moment, if we check the data for the JPY, what we can see is that hedge funds have been decreasing their net positions lately on the JPY. However, if we scroll down and we see at what is actually being going on in the long term, we can see a massive increase of the net positions from 14.1k net positions all the way up to 44.9k net positions. So we had a massive increase of the net positioning from a JPY perspective, which means that clearly from a JPY perspective in the long term, we have a very strong JPY. Now keep in mind that all the pairs on the spot are traded, all currencies on the spot are traded against the USD. So if you're checking the data for the JPY, you're actually checking JPY USD, which means that if you want to check the data for the USD JPY, you have to look what is actually going on if everything basically flipped. And if we read here that net positions have increased on the JPY, it means that they have increased on the JPY USD. But since we're checking USD JPY, it means that net positions have been decreasing, which means that USD JPY in the long term is pretty bearish. And that is already what we had noticed from a monthly perspective, since we are testing this extremely strong resistance from which we do expect the market to create a move to the downside. So what we can take here from the data is that in the long term, JPY is strong, meaning USD JPY is weak. However, in the short term, we have seen a decrease of the net positions, and in fact, USD JPY is providing this retracement. So everything at the moment is reflecting exactly what we see here from a COT perspective, with currently 63.4k longs from an institutional perspective and only 18.4k shorts. Obviously, reverse everything since we're checking the USD JPY. Now, how we will be approaching this kind of opportunity and situation with students. Now, as I said earlier, we will be reactive and not predictive as usual. The monthly, weekly, and daily timeframes are the best timeframes for the direction of the market. But when it comes to confirmations and entries, the best timeframe is the 4 hours. And at the moment on the 4 hours, everything is still bullish. It has been bullish all the time. During this move to the upside, everything has remained bullish all the time. So at the moment, we absolutely cannot be looking for any kind of short opportunities. However, things could change quite soon. In fact, what we will be doing with students is monitoring price action from a 4-hour perspective during this move to the upside. And we will be waiting for the market to shift from a 4-hour bullish market as we have right now to a 4-hour bearish market. And as soon as the market will shift from a 4-hour bullish to a 4-hour bearish market, at that point, we will be adding USD JPY to our watch list. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities at that point for the move to the downside and for the market to retrace at least to the 0.32 of the Fibonacci taken on the daily impulse. If you made it this far in the video, it would be great if you can smash that like button and comment below. It really does support the channel and support the creation of more free education and analysis for all of you. But this is just the tip of the iceberg. I have a full mentorship program that will teach you exactly the rules of my rule-based strategies and also give you every single day a new market breakdown in which I show you exactly how to apply the strategies with entries, stops, and take profits, as well as answering every question that you have every single day, including the weekends. So it's a very complete program. It will teach you everything that you need to trade the market consistently. So I will see you in it. The link is in the description, or I will see you in the next video.